How do you know when you've found the one?
Some investors will tell you to take a leap of faith and trust the plan, but there's nothing beating a few hours of detailed fundamental analysis. We promise that it will save you a lot of time and pain. In fact, a majority of investors select an asset, buy it, and immediately spend entire weeks talking with the project's community and owners while searching for extremely bullish charts that not even Bitcoin can match. Don't get confused. Business is simply business, and at the end of the day, you're supposed to invest financially and not emotionally. That's why you need to use fundamental analysis to find your match. The market is full of all kinds of cryptocurrencies, and when you're new, it might seem like they're all the same, but are they? Hello, Shrimpy fans. In today's video, we're going to find out how to invest in the best projects and discover what it takes to become a crypto expert. You may hear that investors need years of experience in TradFi under their belt before taking any serious risks in crypto, but when markets are this bullish, it's enough to follow a few fundamental tips and carry them out before making a final decision and clicking the buy button. Being informed is how you pave the road to success in the world of decentralized technologies, and that's why we at Shrimpy work meticulously on an educational platform that brings you the latest guides, how-tos, and explanations. The complexity of digital assets is often too much for newcomers, and that's why we've designed the best possible learning experience that one can have for free. The Shrimpy Academy is your ticket to financial freedom. Why? Because it demystifies alien blockchain concepts by digesting them for you in such a way that you don't even need to understand beginner lessons like blockchain networks, smart contracts, or stablecoins. Scroll through our favorite educational platform, but first, let's find out how to make wise investing decisions. Tip number 1, check out the team. Every cryptocurrency is being worked on by real people. While smart contracts may do the bulk of the work, the truth is that no project advances to CoinMarketCap's top 100 arena without a team of skilled blockchain developers putting their hours into it. Our community is more diverse than anyone can imagine. People from all over the world work day and night creating the best crypto features yet. However, that doesn't mean that we don't have our fair share of scammers and schemers. Crypto is the currency of the internet, and in the digital Wild West, anyone can portray themselves as anyone. The newest altcoin might have flashy marketing and an active Discord mod, but most of the time you'll notice that it's just one guy managing the project. Is that a red flag? While geniuses like Satoshi probably worked on their crypto all on their own, that doesn't mean that every developer is capable of building a great platform solo. Our advice, spend some time researching entire teams. Background and experience are important, so treat the asset you're interested in like it's a job interview. Did the team come out of nowhere, promising riches and hyped up tools, passing anything known to crypto kind? That tone rings a major alarm, and you should run away from a project like that right away. Take Andre Cronje as an example for this tip. He had a well-known history of working with other famous crypto projects, and before you know it, he built one of the greatest yield farming platforms. While some may have been lucky, those who recognize Cronje's talents on time have made a fortune through pure research alone. Tip number 2, got funding? Follow the smart money is a Wall Street slang as old as the market itself. Institutional investors with decades worth of experience know what they're doing, and they're not known for making rash decisions by investing in assets without a second thought. Follow them even if it means getting yourself burned once or twice, because let's face it, most of us are not that good at investing, and it's better to follow an expert who knows what they're doing. That's why any kind of fundamental analysis includes visiting Crunchbase, where you can easily learn about a project's financial activity. Specifically, you'll find investment rounds carried out by major investment funds or trading groups. These entities either invest in a project by financing it or by buying their tokens. Projects tend to raise $1 million or $2 million before they're even spotted by the retail market, and by that moment, you'll have the leisure of investing in a project that's already a part of a fund's portfolio. Tip number 3, track development updates. Let's go back to square one. We've assessed in the first tip that developers matter, but what's the use to an excellent team when its production line has come to a halt? Activity is everything in crypto, and while most value cheap marketing gimmicks, it's best to get technical by inspecting a team's development progress. How many new features have rolled out in the past month? Did the new update arrive smoothly, or was it broken and full of bugs? These are all questions that one should look into when analyzing a cryptocurrency's technical progress. Your best bet with scoring a rising star is if you understand code yourself. That way, you can actually see how complex a smart contract is and if it delivers what the team promised. Tip number 4, inspect market cap. A cryptocurrency's defining feature is its market cap. Short for market capitalization, market cap is simply the combination of circulating coins and the value of one individual coin. When multiplied, you'll receive a number depicting the project's overall market value. Why is it so important? Because market caps provide you with a rough idea of how fast an asset progresses or how big it can get in a year or two. With a small market cap, cryptocurrencies are prone to explode in value once enough investors join the project. On the other hand, a large market cap indicates that you need to move a lot of money in order to influence the asset's value. While we're at it, let's briefly mention circulating supply. Bitcoin is known for having a hard cap supply of 21 million coins. If it were any lower or higher, this type of data would have an immense impact on prices. A small number of tokens can skyrocket with high enough demand. However, a diluted supply with hundreds of millions of tokens means that the asset is valued less than the former example. And tip number 5, examine the community. The larger the community, the better the chance of going to the moon, right? Despite the fact that a big family implies the potential for profitable adventure, there are still instances when that's not the case. For example, airdrop projects are notorious for being full to the brim with people. After all, who doesn't want to receive free cryptocurrencies? The negative aspect of that is that users are there only for the money and that they're not willing to help out. Quantity isn't everything, and you'll find that in this industry, quality is more important than anything else. So once you join a project's Telegram or Discord channels, make sure to analyze its members and figure out if the community is alive at all times or only when something is being given away. Developers can't carry out literally all tasks, so examine if the community is there to drive the project. The best way to go around that is by analyzing participation levels in community contests or checking if developers from the community are there to help out. There's a lot more to crypto investing, but for now, these 5 tips are everything that one needs to become successful. A short summary would be to keep track of a project's team and evaluate how good they are at what they're doing. But don't forget to dip your toes into technical waters by tracking developer diaries, circulating supply curves, funding rounds, and market caps. Thank you so much for watching today's video. If you enjoyed it, please give it a thumbs up and subscribe to our channel by clicking the red subscribe button. You can find us on Twitter and Instagram at Shrimpy App and on our blog at blog.shrimpy.io.